All right, guys, let's get rolling here this morning. So, really a neat market environment that we're in. We've been doing videos for the last week on how this market's been on the edge of a cliff, waiting for a possible big pullback, and we've got it. The really This is a daily chart on the ES. You can see we broke the 50 MA for the first time. We closed below for the first time since the beginning of May. Right here, we closed below it for the first time all the way back. We had two candle close on May the 5th or May the 2nd. So the beginning of the May was the first time we closed above the 50. And if you noticed, we've never closed below that 50 MA all the way up until recently. There's the 50, the blue line. Never had a two candle close. It dipped below it a couple times, but the market rallied back. Dip below it, rally back, dip below it, rally back. We talked about last week up at this level. I said, watch for the market to this critical level. And we had a huge buy signal right here. And I'm going to show you the settings that you want to use on our algorithm. And it caught that big move up. And then we closed below. That started the weakness right before it closed below the 50 to start looking for shorts only. It's been a short only environment. We've had no longs. 1, 2, 3, 4, 5, 6. This would be the 7th day below major levels. It's been a short environment. So when I put these on the charts also. So this is simply a daily chart. There's no, like I said on the last week's video, there's no magical moving averages to use. Just put up a 9, 50, a 20, 100, and 200. The 200 is major support if we get another sell-off. We're butting our head up against the 100-day moving average right now. That's what it bounced off 3 days ago and had a huge rally. Then we broke it. Now it's butting its head up against it. It'll be a tradable level today again. But you can just put those on your intraday charts and look for the algorithm to fire some trades off of that. Now, if you look at the algorithm, we've had some nice volatility. What is making this market move around? I sent an email out yesterday describing the environment that we're in. So check your inboxes, and I go over exactly what type of environment we're in. The word is they may not bump interest rates down in the December meeting. The Fed may not bump rates down. That has gotten the market in a big stir. Consequently, we've had everybody saying stock valuations are extremely high. We have blowout earnings with NVIDIA yesterday, $57 billion in revenues. They beat the street expectation, $1.30 over $1.25. They thought that possibly would start the Christmas rally yesterday, but the market did a bear trap. And the bull trap caught all the traders long. So we had blowout earnings with NVIDIA, and then the bear trap, they caught them right here. And our algorithm caught the top right at 11 o'clock. So if you look at the NVIDIA came out, market rallied hard. They thought, well, you know what? This is the 50-day moving average. I put it on the intraday charts. Look how it held the 50 after NVIDIA came out on the S&P 500. It's one of the levels that we really want to concentrate on. And this told us that this is the market's on the edge of a cliff, per se, that the market is very vulnerable right now. You got the interest rate environment we're in. They may not be lowering rates in the December meeting. You've got environment about the tariffs. The government was recently shut down. You've got commercial real estate now possibly going, they're calling it like a 2008 environment right now. So I went over that in the email I sent out to everybody. So check that out if you want to look what type of environment we're in. But it's creating volatility in the market. That's great for us because volatility is what we need as day traders or position traders. So let's take a look at the algorithm. And I'm going to show you these trigger entries on the way up yesterday. And this was the bull trap. The bull trap came in right here. Our algorithm caught it. The bull trap came in right there at exactly 11 a.m. It caught all the longs. Everybody saw it bounce off the 50 MA. This is a critical level for institutional traders, banks, hedge funds, prop firms, etc. They really like to use the 50 as a gauge. If you're above it, we're in a bullish market environment. If you're below it, you're in a bearish market environment. And so it held it yesterday. And then we had a buy signal at 8:28 in the morning. You see the green arrow that fired off and the yellow trigger. We had a buy signal at 8:36. We had a buy signal at 9:30, 9:32, 9:41, another buy signal at 9:47, another buy signal at 10:32, and then 11 o'clock, we had a trend change. Our trend filter turned green to red. We know if that happens, we have a possible trend change, and we're looking for a possible rollover. Then we got a sell signal that came in at 11:09, 11:18, 11:22. Now, these go off on your speakers. If your speakers are turned up, these do not repaint. But this is a critical level here. This is what started the big move down yesterday. And man, was it beautiful. So it got below the 50 again. That's why I like putting the daily levels on top of our intraday charts. It got below the 50 MA. Look at the market. This is a turning point in the market for the day. With a sell signal, and then it rallied up and went right into our 25 liquidity grab zone. They brought the market hard down, broke the 50 MA on the daily chart, on our intraday charts, rallied back up into the 25 sell zone, and that started the plunge for the day. And man, it did have some nice sell signals all day. We had a sell signal right there at 11:29 at the market top, 67.20. And then we had another sell signal, another sell signal, another signal. And then it came right back up to the 25 sell zone. Another major. Now, what's our target? Well, if you broke the 50, where do you like to go? You like to go down to the 100. Just like the 100, I'm going to show you where our target is. We break the 100. Guess what we're trying to work our way down to? This market's trying to work its way down to the 200 daily MA. It's in a very, very weak environment right now. And that's why you're seeing a big sell-off in technology stocks. And you're seeing a big sell-off, a rotation out of some of the large big cap stocks and mid cap stocks. So you get sell signals all the way down, but these are two critical levels. You get into this sell zone, you got to roll over, and then it try to counter its way back up a little bit. We don't take those because we're in a downtrend. We know that, and it turned right back red. And we had another sell signal, counter trend traded back up, and then it found its support on the 100-day moving average. Big rally, buy signal at 12:57. We're still down on the daily chart. So this is just a short covering where the bulls temporarily took over. So take a look at this, how cool this is using these levels. So you already went from breaking the 50 target down to the 100, and then we came down to it. Beautiful buy signal at 12:57, and this is a big rally. 66.05 all the way up to 54. It went up 50 S&P points. But then the market said, hey, the bears took control. We're going to roll this market right back over. Sell signal, sell signal, sell signal. And they gave the 50 point move all back up, 50-point drop. And then they came down to the 100, worked its way down, and then we had some trades into the close. If we go into today's trading, let's take a look at it. Today's trading, we had a sell signal, sell signal, sell signal, sell signal. This is a big one for you European traders or you London traders. A 73 all the way down to 51. And then we had, they tried to bring it back up. 70 all the way up to 85. And then they just have taken it to the woodshed again. Another sell signal. And now another sell signal here this morning at 7 o'clock this morning. This was at 47 3/4, low of almost 16-point move. These moves are not small in the S&P right now. The volatility is going to continue. You got the interest rate scare. You got overvalued stock evaluations we're talking about. Warren Buffett went into major cash position. I mean, you got so many catalysts out there right now. The tariffs, the government. I mean, you got so many different catalysts that are moving this market around. You know, possibly a commercial real estate bust coming up. You know, it's just, you have so many news events is moving this market around. That's good for us. So now we're looking for the next setup. We had a buy signal here. We had two major buy signals in the buy zone. The algorithm is really picking these up in this environment. There's a nice buy signal. Another nice buy signal. And we just had another nice buy signal 7:45, a half hour ago. Beautiful setup. Got inside. This is a dual confluence inside my 25 buy zone. Liquidity grab zone, consequently, yellow trigger. And that's in type of environment win. So look at these buy setups we have just since 7 o'clock this morning. 1, 2, 3. So now we're setting up for another possible buy signal inside the buy zone. If it goes below the line in the sand, which is 80 right here, 79.25, we'll look for this market to roll over again, because guess what it's doing? It's hit its head on its 100-day moving average. Look at this. Now that's resistance. Now that's resistance. Where's our next level? Look at this market drop. All the way down to 64.20. 64.20 is the drop. We can come all the way down here on the daily chart. There's still room for this market to move down. It is a seller's market the past week and a half. So I like using the daily chart like that to help us determine our bias. I also like using the 2-hour chart. I did a video on that. It lets us know our bias. If I look at the 2-hour chart, if you've been buying, you've been wrong. You should have been selling ever since 8 o'clock on November 13th. Look at those. Like I said, no magical moving averages. It's a 120-minute chart, a 2-hour chart. The 9, 50, 20, 100, 200. Look at it. They've just been in a downtrend. We haven't been in an uptrend since November 10th, but that was very short-lived for 3 days. And it's been a seller. Every rally they sell. Rally they sell. That's the big plunge yesterday with NVIDIA. That's the bull trap they caught everybody. And look, this market continues. The bias is down. Looking to short. It's a short environment. So now our next level is down to 64.20 as a 200-day on the daily. Like I said, I went over all indexes in my last video. I went over the banking sector. I went over the Russell 2000. I went over the small caps, the mid caps, the large caps. They all broke their 50. So this is a very interesting environment that we're in right now. So we'll see if the 100's going to break down and turn red on our trend filter, and we're going to look to bring this thing down to 64.20 on the S&P as far as that goes. But if we look at the algorithm, you have to stick with the trend. If the green trend filter's up, that's a buying environment. If it's red, it's a selling environment. So there's only two ways that we need to look at buying and selling. Always, especially in this environment that we're in, always stick on the side of the trend filter. All right, we need to do that. Always stick on the side of the trend filter if you're trading, if you're day trading or position trading these markets. And I don't care if you're trading stocks, futures, whatever you're trading with the algorithm, crypto, it works on all of them. You just got to make sure you stay on the trend filter, because that trend filter, what's back tested over 30 years, is the best reversal indicator on the S&P. So we want to stick on the side of the trend filter. 1, if it's green, you want to buy the retracement or buy the yellow trigger entry. So there's only 2 entries we do. 1, buy or sell yellow trigger entries. So if we buy or sell yellow trigger entries, that's a sweet spot in the market. That's when the market comes inside of our trend zone, and then we get a reversal. All right, I'll show you that. I'll blow that up in a second. And number 2, buy the liquidity grab. The market's always trying to find liquidity. So the market's always trying to find liquidity. What it does, it captures the rolling position traders. Buy 25, buy or sell 25 zones. That's the liquidity grab zones. Right? That's the only 2 setups we have in the trading room that works on a day-to-day, week-to-week, month-to-month, year-to-year basis, because we're getting the market to let us buy liquidity on a pullback. So there's you buy or sell the yellow trigger entries. And that's how that bull trap was beautiful yesterday. Beautiful bull trap. Right there. So you want to stick on the side, buy the sell zone. So if I blow it up Always stick on the side of the trend filler. If we're green, you buy pullbacks into our 25 buy and sell zones. You see these red, these are proprietary levels that we built. This is our 25 buy and sell zones. The market loves to pull back and reverse inside these zones. Pull back, reverse inside these zones. If it's red over here, it likes to pull back, reverse inside these zones. Now, if it reverses inside the zones and consequently reverses inside of our trend filter, you have confluence. It happened at 7:21 this morning. And it happened at 7:05 this morning. Now, this is confluence because you're reversing inside of my 25 trend zone and you're reversing inside of my trend zone, and the 25 zone. So these are 25 zone sells, 25 zone sell, 25 zone buy, 25. Do you think it's just by chance that's reversing inside of these zones? You know, this is how algorithms control these markets. Just like the last trade setup when we started this video, what I said, we have a buy setup coming. So how do you trade it? We had a buy setup coming. We're green trend zone. Green trend zone. There's the 25 buy zone. It says coming inside 25 buy zone. We just had a buy signal. Came right inside of it. It reversed. There's your entry. 89.75. It got as high as 97. 8 S&P point potential. Inside of the zone. So you have your buy zones here. You got your buy zones, 25 buy zones, 25 buy zone. And then you got your sell zones. Don't make it any more difficult than that and stick with trend. Then you can use the daily charts and 2-hour charts to find the trend direction when you get in the morning for your bias to help with your intraday trading to see where these critical levels are. But these are all buy setups in a row. Look how the market likes to pull back and add liquidity and take the wrongly positioned traders out using all these moving average crossovers, the MAC, Fibonacci levels. They're blowing right through those levels. They're bringing them right to their liquidity grab levels, right? And you just keep your stops in. Keep your stops in below your pull-in candle. Always keep your stops in. These are sell. But the entries don't change. There's only 2 entries, yellow trigger entry and the 25 buy zone entry. That's it. We don't need to do anything else. The market environment, the volatility will create opportunity. Just since 6:53, this is the opportunity we had this morning so far. That's how much volatility we're getting in the market. 1, 2, 3, 4, 5, 6 trades. This one didn't qualify because it never pulled in. It's got to pull in inside the zone. You cannot pull in outside the zone. You cannot take that trade. But this is the type of environment that we're in now. And if I go through yesterday, like I said, we've had some big trades. They just discounted the market really good. 32, it just crushed the market. Look at all these buy and sell signals during the day. Look at the yellow triggers. Now, the best trade you're going to get in the trading room, guys, is when you get confluence. That's when you get inside of our 30-year trend filter and inside of the sell zone. There's a sell zone, caught that high, and the trigger happened inside of it, yellow trigger, capping right here on the 20. This is called confluence. That's the best one you're going to get. These are more shallow. They still worked out well. They're more shallow, but see how they never came down to the buy zone, 25 buy zone? So they didn't grab liquidity on that. It tells you that the market's not grabbing liquidity on that. It just missed it. But it's still a buy signal. That still was 95 up to 09. But the confluence trades, this is where you want to look, right there. That's confluence. When both of our buy signals or sell signals come together. That's confluence. Now, what I did, I told you members, what I did in this environment, I sent an email out yesterday. I widened the zone to 62. So the zone, because we're getting a lot of volatility because I want more yellow trigger entries. Widen your zone to 62. from 54.38 to 62.28, and then trend filter move from 100 to 110. What that does, it smooths out the trends more for you in a very volatile environment. It smooths out the trends and it gives you more yellow trigger entries all day long. So you have a lot of setups. By doing that with this volatility, I mean, we've had tons of setups. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 14, 15, 16, 17, 18, 19, 20, 21 just before noon setups. So do that, and it's going to create an environment like this where you've got just this morning, just at 7 o'clock, we've had 1, 2, 3, 4, 5, 6 qualified setups. It's been 1, 2, 3, 4, 5, 6. It's been 6 for 6. It's reversed inside of my zone since 7 o'clock. 6 times in a row so far. And it's not even 8:43. Just by adjusting that to a 62.28 zone and 110 trend zone, you guys can do that.